We're live. Welcome to the DFI Podcast, where we go deep on Web3 infrastructure and services. Ishan, good to see you again.
Yes, happy to be back. It's been a while.
It has been, too much of a hiatus, but we'll at least get one episode in before Turkey Day.
Exactly, you know it.
Well, we were just getting into this a second ago, and so I think this is like the perfect start. I mean, this is 4 or 5 hours before we started recording this podcast. They announced that CZ, the CEO of Binance, one of the largest global crypto exchanges, has been has settled. Is it settled with the DOJ for $4 billion?
Yeah. So Binance is the largest crypto exchange in the world and settled with the DOJ for $4.3 billion, which is humongous, right? And CZ has to pay a $50 million fine and step down from Binance as CEO. He cannot be involved in any sort of operations or management or anything for 3 years and for 3 years, basically. I think it's 3 years starting at some timeline or monitoring or something, but basically 3 years. On top of that, I don't know if Binance had to pay $4.3 billion to the DOJ and they had to pay money to the Treasury, or they had to pay a fine to the Treasury, or it's separately the U.S. Treasury and the CFTC announced their own settlements with Binance for money laundering, for money laundering, for not doing KYC correctly or not doing KYC at all. So big news that dropped today. Wes, what do you think?
It's huge. You know, it's funny just reflecting. People have been talking about this organization for a very long time. It's been so big and so successful. And they did not follow the public auditing processes that Coinbase followed. A lot of people were skeptical that they would get in trouble for collusion of funds, similar to what FTX did, taking customer funds and putting them into other things. Mm-hmm. But it turns out that was not the case. This was just sort of a very open lawsuit for not doing KYC and AML. Which is a bit of a surprise, but hopefully this will start clearing out the crypto community generally. I mean, if there were any issues going on and if this was a legitimate lawsuit, hopefully this will bring more things above board and better transparency for the industry. Do you think that's a possible outcome?
Yeah, I mean, I won't say it's super easy, but it should be relatively straightforward to, build out a KYC program so that you're following U.S. law. There are lots of other fintech companies that do it, so I don't know why Binance couldn't. But, it just seems like FTX imploded. Binance has had these issues. Obviously, they're going to, pay a big fine. So I posted this on Warpcast like 10 minutes ago. I was like, somebody should just build a crypto exchange and not break the law. And that would probably be a really big business.
That's right. That's exactly right. I mean, does that mean that Coinbase is going to blow up as a result of this? Did their stock price bump of those users? Well,
yeah, check it out. I bet. I don't know. It could also have gone down. You always never know what sentiment shifts, right? Goes up because one less competitor in the market, goes down because there's less crypto transactions happening overall.
It's true. It like maybe they had a small bump. They had like maybe a 5% bump, so nothing crazy yet.
That's I feel like that's pretty big. That's in the last just today, right? So that's pretty big.
Yeah. That's $98 up to $105. The other funny thing about this one is I don't know if you've ever seen CZ. A lot of times when he posts on Twitter, he posts this number 4. He holds his hands up holding the number 4. He's got like, I don't know, 4 different internal missions or like key points that he wants his employees in the community to remember. One is like, focus on the mission. 2 is like da-da-da. And number 4 is like, don't get distracted by outside noise. And anytime that there was rumors about Binance around FTX, he would just hold up his hand 4, like, hey guys, this is like our rallying cry. 4, like, remember, we're not going to get distracted by outside things. So much that it became a meme. And then the DOJ decided to sue him for $4 billion. How many amount they could have sued him for? Wow. Yeah. Who knows? They have a sense of humor.
Wow. That's wild though. That is breaking news today. Though I'm not sure if it'll be breaking by the time people are listening to this or watching this.
That's true. That's true. But yeah, no, it's good progress. So we'll have to see how that plays out.
I agree. I think that, yeah, I mean, I feel like every new industry has their like people try to take advantage, right? Like the scams and the rug pulls and everything. And crypto just got a lot of attention because it's very financialized, right? And so it gets a lot of attention when, Bitcoin and Ethereum are going up. But you still see this with lots of companies. You saw this in finance, right? You saw this with Elizabeth Holmes. You saw this in tech. So hopefully people just, stop breaking the law. That would be
exactly.
ideal.
It's unavoidable. Well, on the upside, should we chat about the MicroStrategy's growth as a result of this latest Bitcoin bump?
Yeah. You want to start with that? I feel like this is it's an interesting story here.
It is, yeah. So MicroStrategy, for folks who don't know, MicroStrategy is a tech company, just a general purpose enterprise software tech company. Been around since, I think, around 2000, maybe a little bit before then. They did a lot of business intelligence software, so they just display nice charts and graphs for business users, showing the underlying data, for any kind of general purpose. They also did some early adopters of mobile technology in the early 2000s. But their CEO, Michael, what is this gentleman's name? Michael Saylor was in 2000, I think 20, right around the time of the COVID impact. He was one of the first enterprise folks to really jump on the Bitcoin bandwagon. He started learning about it. He started raving about it, and he, I would say, pushed his company to invest a significant portion of their treasury holdings in Bitcoin. And it was a very controversial thing at the time. They had to go through a lot of process with their shareholders, but he's been so far down the rabbit hole now, and people would almost accuse him of being eccentrically in favor of Bitcoin. There's plenty of memes of him making, wild claims about the value of Bitcoin. But nevertheless, his company has invested so much in Bitcoin, and they've done it so much earlier than other companies that, just like any company can hold any assets, they could hold buildings, they could hold cash, they could hold stock. This company holds a significant amount of Bitcoin. They hold about $5 billion worth of just raw Bitcoin within their company, to the point where if a company owns enough Bitcoin, are you then investing in the company because of the technology that they sell to enterprises like BI software, or are you investing in the company because they own so much Bitcoin?
Yeah.
What does it look like to you, Ishan?
I don't know. It's just wild that like companies do this, right? Can you imagine that like they bought it? I guess the price is still higher than it was when he started buying it, but like they saw the swing and then they saw it come back down, and now they're seeing it on the way back up. And how much it affected like the balance sheet and the value of the company. Is MicroStrategy public?
They are, yes.
And so like, did the swings of Bitcoin price also affect their stock price?
Yes, they did dramatically. Okay. Because their underlying business is relatively steady state. I mean, they have some significant accounts. They have a good book of business generally, but it's they're not like an Apple or Google that's came out with a massive, high growth software. They're a mature software company that serves a lot of government and big business, and they have existing contracts. So that business is not really changing dramatically on its own. Their stock price, if you take a look at it, I'll pull it up at the same time here, over the past, let's say 1 year, has fluctuated wildly. It started at $167. Now the current price of the stock is $493.
What's that in market cap terms?
Let's see. The current market cap of the company is just under $7 billion.
Wild. And they have like $5 billion in Bitcoin.
Yeah.
Or more. I wonder like how much cash on hand they have. Because, okay, so basically this is not like a super high margin business, or it's not a high margin and high growth business. So you're not getting like lots of multiples of ARR plus cash holdings. Interesting.
Right. I think you're exactly right. I don't know if the core business is driving that much beyond it. But the interesting thing is, we talked about this, is that other companies have been trying to launch a Bitcoin ETF for a long time. The SEC says no, you cannot launch a Bitcoin ETF. But if you buy MicroStrategy's, 75% of the value of the company is Bitcoin holdings.
Yeah, it has to be, because if you look at this, right, MicroStrategy's PE ratio is almost 500. It's 487. That's wild. So that means that a lot of that must be coming. A lot of that value must be come from Bitcoin then, because you take Apple, right? Apple's PE ratio, off the top of my head, I don't remember, is 31 right now, right? And that's a much better business. So yeah, I guess investors are invested in MicroStrategy because they want access to like a Bitcoin ETF.
It's such a funny, scenario. I actually had friends of mine who used to work at traditional enterprise software companies. They went to work for MicroStrategies, not expecting it to be anything terribly exciting. And then after COVID, all their stock options dramatically ballooned, and they were making incredible money on the back of this Bitcoin valuation.
Mm-hmm.
They didn't really know what was going to happen, but they were in the right place at the right time.
I hope well, I guess the stock price is up again. I was like, I hope they exited at the top of the Bitcoin market.
Exactly. Well, that's the other thing too, is that when Bitcoin went down to $16,000 last year, kind of at the bottom of the bear market, people look at Michael Saylor and they say he's absolutely crazy. He put all this money in this pretend internet money, and now look at what he's done to his company. Yeah. But then all of a sudden, now when the price swings, they look at him like a hero. So it's funny how quickly you can transition that
without having done anything, right? Like, just buy Bitcoin, and then if the market goes up, you look like a genius. If the market goes down, you look like an idiot. And all you did was buy some Bitcoin. Amazing. I mean, the company's legit, right? They make like $600 million a year almost. That's like a lot of money. Like, people think it's easy to make $1 billion a year or $600 million a year. It's not. It's a legit company doing well, but looks like it's a Bitcoin meme stock. I'm just surprised that it hasn't seen like massive fluctuations on Robinhood yet. Yeah. That's like the next step. That's what he should do. He should, I mean, this would actually probably be violating securities law. So I'm actually saying this as a joke and I'm not serious, but like, imagine if he like turned his stock into like a meme stock and everyone was trading on it on Robinhood, like they did GameStop, right? But
the pump.
In addition to the Bitcoin he has, it would be a wild ride for that company.
That's right. You get a community behind it. I don't know if that's really continued, the whole Wall Street Bets thing, or if it's kind of died down with GameStop and all that. But that was like a huge phenomenon a few years ago.
There was also the Bed Bath & Beyond story, right? I don't know what's the latest. I feel like I'm sure there are some ones that are like the Bed Bath & Beyond story is wild, actually. We should talk about that one day.
Can you share it? I've never heard it.
I don't remember it off the top of my head, so I can share it in another episode. But basically, yeah, it's a little bit complicated. I remember reading it once and being like, "Oh, that's wild." Or maybe you can share it at the end of the episode if I can pull it up.
Fair enough. We can do some digging. Well, as an NBA fan, Ishan, you're an NBA person. You're a basketball person.
I am.
Did you buy Top Shots when it was out there?
I have one.
Top
Yeah, I have a Top Shot. Yeah,
what is this Top? It would be good to explain like what Top Shots is. I actually I barely know. I barely heard the story about this. What was the appeal for you?
So it's just like a collectibles item, but it's an NFT. It's like, I'm really into sports. So I used to collect a lot of sports cards. Signed, not signed, whatever, when I was a kid, right? And they're like collector's items, and some of them they're only made like 100 ever. Others are like, they're like a few thousand or whatever. But you can just basically buy like NFTs made by the NBA for like different players. And like the NBA is so smart. If anything insane happens, like Donovan Mitchell scored 71 points last year, you can mint like a bunch of NFTs. So like, instead of just one NFT with like Donovan Mitchell with like with him, I don't know, scoring, it's a graphic, right? And then like you can make different graphics, like with him, like, you know, making a 3-pointer or him making a crazy dunk or whatever. And so you can like sell a lot of these, but it's just a collector's item. I didn't spend a lot of money on mine. I spent like, I don't know, $10 to $20. I don't remember the top of my head. But yeah, I think that's what NBA Top Shot is, and it's made by Dapper Labs. So they're the ones who like, they're like the people who created it with the NBA, right? And the big news is that so Disney has an NFT deal with Dapper Labs for Dapper Labs to build out their like NFT collection. So you see a lot of companies getting, now that like markets are picking up again, right? Companies are getting back into like NFTs and digital collectors items and stuff like that, right? So you'll be able to get like pins and other content based on Disney's IP as an NFT.
That opens up some use cases. Do you think it'll be like Pokemon Go, where people are like running around the park trying to collect NFT collectibles?
I think it would be great. I think, if you like, I don't know how you would do this, but being able to have an app where like you can see your NFTs and, you know, trade them or whatever, and you go into the Disney park, right? Disney World, Disneyland, Epcot, whatever. And then you can collect NFTs, I think would be like a cool experience for like a lot of young people who are into it, right? I do feel like, as someone who, if you're like going into the what do you call it, like the park, maybe it takes away from the park, but like, I don't know, people
Disney
have different
World
interests, right? But I think actually the bigger thing here, I think what's interesting is that like Disney is getting into NFTs and to digital collectibles, and it seems that NFTs have become like the de facto standard of digital collectibles.
Oh, no, that's a really good point, though. I mean, because like, let's say Disney wanted to have some interactive digital experience, and only people with a certain pass could go into this section of the park, and they had to use their digital pass, and they could go in, and it would unlock a unique experience for them. Well, they could just do that in a centralized thing today, but if it's getting easy enough where they can do that through an NFT now, and the default is to do an NFT because it's more relevant for the latest technology, and it allows people to trade and other things. It just gives them more functionality. That could be a massive like signal for the NFT space, that it's not hard to use. You don't have to have a Web3 wallet anymore. These like all these on-ramp technologies that are making it accessible.
I think that's the story here. I think the story is that NFTs are going to be the standard for digital collectibles, and we're like going to stop calling them NFTs in the future, right? Like the technology will be in an NFT, but like imagine, and then you'll have like an app that acts as a wallet, but maybe you don't call it a wallet. And then imagine that like, you have an NBA Top Shot, and you have and you have another person who has like a Disney NFT or a Disney based IP. You could trade those. Before, you would never be able to trade those, right? Because these are like minted on chain, right? And Disney's not, you own them. You do not, like, Disney's just not showing it to you in your app. You could trade stuff that are completely unrelated that that you wouldn't do before. Now, of course, you could also just buy things that you couldn't do before using crypto, right? Or even like your credit card on something like OpenSea. But I'm really interested to see what happens to digital collectors items, where if everyone is using the same technology, you can basically like, there's going to be like someone who's going to build this consumer app where you can like, instead of like buying and selling, it'll be like a place where people go to like just trade items. And it'll be like super cool, it'll be like, that'll be the experience. It'll be less about like the buying and selling, and it'll be more about the trading and like showing off your collector's items and stuff like that.
Yeah, that makes sense. I mean, look, growing up, I had the baseball cards. That was like the most fun thing, trading with your friends. Like that's, if you're a fan of something, it means something. Like if it's a picture of Mickey Mouse, whatever, it has a different dimension to it. So, Wow.
Yeah, and
That's a
then
big
once you
step.
have once you tie NFTs with actual apps, so an example of this is in the physical world, when I was in 6th through 7th grade, I played a lot of Yu-Gi-Oh.
Yeah.
And the Yu-Gi-Oh cards, right? And we would play with physical cards. We would play the game with physical cards. We would trade physical cards and everything. But now you could if now of course this doesn't exist, but you could imagine a world where Yu-Gi-Oh comes out with the game, right? And each card is an NFT. Right? And then you can basically just trade cards, or maybe the rare cards are NFTs because no one wants to mint a million of the basic cards, right? But you could just trade that. And then if you have that card, that's the only way that you could use. If you have that NFT, that's the only way to use that in the game, right? Or things like that. I don't know. I feel like that would be pretty cool.
No, it's a valid point because you're right. Like Pokemon Go cards, Yu-Gi-Oh, Magic the Gathering, these are all significant businesses on their own in terms of revenue. And if the world, especially young people, are moving away from physical and more towards digital, anyways, it seems like a natural outcome.
Yeah. I mean, even with Pokemon Go, right? If I want to trade a Pokemon to someone else, they have to have Pokemon Go. But imagine they made special Pokemon, they already have special Pokemons, like a silver version that there's some probability that it's a shiny version of the Pokemon that there's a probability that it shows up, right? But they could do really cool things where there's only 1,000 I'm gonna make something up, yellow shiny Mewtwo's or something, and to get those you have to you have to get an NFT, and that's the only way it appears in the game. But then if you trade your NFT to someone else, then it could appear in their game, right? And it could be completely decoupled from the fact that you're playing Pokemon Go. So I think there's a huge market for NFTs, but it's just not the purpose will be I have NFTs in my wallet, but it'll be tied to other digital worlds or physical worlds.
Yes. No, who's building the Poke Bridge and the Poke Roll-ups? That's the next $1 billion idea.
Yeah, exactly.
Who's building this?
Yeah, I don't know. What are your thoughts on NFTs? I feel spend a lot of time on what I'm thinking on NFTs.
Well, I haven't used them personally as much. I just haven't gotten into my daily products that I interact with. But I love the ability for it to represent any kind of a store of value. What I'm most eager to see is NFTs representing off-chain real-world assets. To me, that's super exciting. Any kind of a token that can represent a physical asset in some sense. And then I always wonder about what are the missing steps to make that happen? Does our legal system need to have better recognition of NFTs, or do contracts need to be written so that those assets are tied to the NFT holder? Those are interesting to me, particularly DeSci space. We had Ben on from Molecule. That was a really good example of folks who are pushing that space. So I think it has a lot of potential. I'm not gonna discount it yet. I think it's gotta have a resurgence in this next bull market. Ether staking rate will increase crypto adoption. Can you tell us what are you thinking about this one, Ishan?
I want you to start with this. You're the staking expert here. I thought this was interesting, and I was like, oh, I need to get Wes's take on this.
Yeah, no, that is actually, ironically, that's what I'm spending a ton of time on now, because the company that I work for is involved in restaking, taking. Well, let me just back up. Should I just give a little bit of context on what staking is for folks that may not be familiar with it? In the past, Ethereum and Bitcoin were based on this scenario called proof of work. You had to, quote, mine Bitcoin or mine Ethereum. You had to have these big machines that would churn out a lot of computation, and that's how you would earn the token. But in this new modern energy efficient scenario, the way that you earn additional tokens on Ethereum or any of these modern blockchains is that you lock up a portion of your tokens, and you lock it up and you tie it up. And when you do that, you can participate in the network and you can earn a return from the network itself. It'll pay you tokens. So there's a really powerful symbiosis between you're contributing to the security of the network so that people can trust the network. But you're also getting a benefit from it. And it's interesting because, I think we were talking about this last time, that people are now looking at launching ETFs around Ethereum, and this is probably part of it as well. So, the interesting thing is, I think the global financial system is always a competition for the lowest risk and the highest return. So, let's say hypothetically, U.S. Treasuries, very low, almost zero risk, and they have a certain amount of return. As you introduce new assets into the financial system, regardless of the risk profile, if they can generate a consistent return, that changes the dynamics. And so that's essentially what this new phenomena is, which is large scale staking. When you contribute a certain amount of your Ethereum to stake, you're going to get 5% on average back on that Ethereum per year. And you might get a little bit more, a little bit less. There's a little bit of work to do as a miner, but it's a very powerful new primitive. And I think, like, to your point in the article here, that's got to be attractive for sovereign wealth funds, maybe not directly, but through other vehicles that would resell access to it, large money managers and things like that, because everybody's looking for reliable return on their money at the end of the day. And so the 5% is great as a general return. I think the stock market on average maybe around that, average 10% returns to S&P 500. So if you can get 5% consistently on your money, that's a big deal. The only thing is, from Ethereum has been returning this amount for about 2 years since the proof of stake merge happened. So, if Ethereum can do that for 4 years, 5 years, 10 years, then it becomes, the risk profile drops, and that 5% becomes much more palatable for these folks.
Yeah, it makes sense. So do you think that Ethereum staking mechanism will increase crypto adoption? Do you think that it is like a powerful tool in the crypto world that, makes crypto more attractive as like an institutional investor?
Yeah, it's a really interesting point because it's sort of a new phenomenon that's never existed. I mean, if someone said, "Hey, do you want to invest in Wall Street?" Well, you really can't do that per se. You could invest in a company like JPMC or maybe another publicly traded financial company, but you can't invest in like the protocol and the communication that Wall Street brokers have with their customers. And that's kind of what you're doing in this case. Like with Ethereum, you're investing in the protocol. It's almost like investing in the internet, but it's like a more financialized version of investing in the internet. And so, yeah, I think a lot of it will depend on how much demand Ethereum can generate, how much usage people can build on top of Ethereum. Or, I mean, the same is true for Cosmos and these other significantly sized layer one blockchains like Solana. Similar scenario there. I think, is Solana proof of stake? I could be wrong about that.
Yeah, I think Solana's proof of stake. Yes.
Okay. Yeah, I think if they can continue to grow demand on top of those use cases and people can use it, then I think you'll see more nuance there. The other interesting thing that happens is that even within the staking ecosystem, there is hyper financialization of staking as well. So that'll be an additional dimension to drive demand. So, for example, when you stake your funds in Ethereum, you don't have to just stake your funds in Ethereum and lock them there. Services like Lido let you stake your funds in Ethereum and take that money that's staked and double down on that and trade it, move it around, loan it, arbitrage, so whatever you want to do with it.
Like you get tokens back, you get Lido tokens back for the Ethereum tokens that you stake. It's also known as a liquid staking protocol to the people who are more familiar with that term.
Yes, exactly. And then what are you going to do with the Lido staking tokens? Well, you can restake those in other protocols now. You can restake those in things like
exactly, yeah.
So it's an endless, and it's not necessarily a bad thing either. I mean, you're taking different risks, but you're also potentially restaking those into protocols that add legitimate value and have certain use cases to them. So with any new technology like this, I mean, if you look at the past as some example, you're going to have massive success and swings up in the bull market. You'll have some suspicious behaviors, that kind of fall out in the next bull market. And then over time, you'll see more successes that maintain itself. So it's very early innings, but I think it's got a lot of potential. What do you think?
What are some applications or financial products that people could build just on like staking and restaking, that could be that you can make an analogy to like traditional finance products or services or applications?
Well, one of the things that's happened.
For one example, like you could imagine like a futures contract on what you think that like the Ethereum, the 5% is it's a variable number, right? It's like 5% today. And it's not like it's coded in that it's 5%, right? There's some equation that drives the return on investment. So you could think of like a futures market where like what you think what like where people trade on like what they think the futures of the yield will be on staking Ethereum just on the Ethereum protocol without like restaking, without liquid staking through Lido or something like that, right? So that's like an example of like a financial service that somebody could create, right? Where you like basically you're betting on the yield that Ethereum generates.
It's a good point. I mean, I think, to your point, anything that people have done in traditional finance, they will do in this new crypto-enabled finance. And anything that could possibly be done, there's armies of people that are thinking about ways and that are building out ways to do this. I mean, that is really like, at the end of the day, one of the most powerful things of the crypto economic community is that, we all have good ideas. There's 8 billion people in this world, and there's armies of smart people in other countries that are thinking, what if I did this? What if I hyper leverage that? And they're trying it and they're testing it out. So I think, yes, like, another good example of this might be there's restaking as a service is kind of coming up as a new frontier. So that, let's say I'm gonna stake 1 Ether somewhere, but I want you to maximize the upside for me. I don't want to have to go find where to put it.
That's cool.
Here it is. Go take care of it, and then you can take a small cut. We know the risk is going to be high, and I'm going to opt into restaking all these along the way. And maybe that's like hedge fund. You say, here's my money. Go give it the maximum upside risk possible, and I'm going to let you manage it for me to some extent. Manage staking as a service.
Wow.
Yeah.
Very cool. Do you know anyone who's doing that? I mean, is there a company that's doing that, like restaking as a service?
It's very, very, very new and very, very early days. There are some companies that will be offering that in the future. I don't know if it's public information, so I'll hold off on sharing that.
That's fair.
But let's just say anyone that's entrepreneurial spirit, they can find a way to do it in the short term.
Yeah, very cool.
Yeah. Well, so should we also chat about? Oh, this is an interesting one. OKX coming out. With this layer 2. What is this all about?
So OKX, for people that are not familiar with, is the 6th largest crypto exchange in the world, centralized crypto exchange in the world, right? And it looks like, from what I'm understanding, that OKX is building their own layer 2, similar to Base. And I guess Kraken is also building their own layer 2, similar to Base. And OKX is called X1, which is, after like Twitter, I feel like people should not name their products after X. But that being aside, it's called X1, and it's based on Polygon, and it will get released sometime next year. I mean, I just find it super interesting that like you're seeing a lot of centralized crypto exchanges. So Coinbase started it with Base. OKX is building one. Apparently, Kraken is building a layer 2. What are your thoughts on all these centralized exchanges building decentralized layer 2 chains, like, which I assume are all on? I guess this one is on Polygon, but on Ethereum or Polygon?
You're right. It looks like it is using the Polygon chain development kit. I don't know if it's going to write back to Polygon as its L1 or if it's going to write back to Ethereum as its L1. Each of these L2s have to write back to some home layer 1 chain. That would be interesting to see, because they may be able to use Polygon's development kit, just the technology itself, but actually write back to Ethereum. In general, I think it's great. OKX, Coinbase, Kraken coming out with their own L2s, because their users are going to, some portion of the users are going to want to get involved in DeFi. They're going to want to try to do some swaps. They're going to want to trade coins. And they really, to have low fees, they need to do that on an L2. So the question from OKX's perspective is, do you just build that in-house and keep the fees within your company? Or do you send your users to someone else's L2, like Arbitrum or Optimism, and lose those fees in the process?
So I guess what is the advantage? Is it that just being able to do more DeFi-like activities so the regulatory agencies in different countries would not get upset at you? Like, what can you do on a layer 2 that is different than a layer 1, either from like a product perspective, like a customer experience perspective, like me, or from like a regulatory perspective that doesn't put the exchange in trouble for doing something like staking and other things?
Well, so the regulatory piece is interesting because I don't know if the layer 2 is going to require staking. A lot of these layer 2s do not require staking, so that can be kind of its own separate, very relevant issue, whether or not they enable staking. But the use case is really what determines whether or not you should use an L2. Let's say you have a gaming use case, and I'm going to go on and I'm going to go to my Pokemon layer 2, Web3 game on OKX. And every few minutes, it's going to write, the state of my location where I'm physically at to the blockchain itself. And maybe it's going to still, what's my Pokemon doing? What's its name? What's its color? It's going to write that information back to the layer 2. That information writing, those transactions are going to be expensive. And if you tried to do it on Ethereum, it would be, $20, $40, $50, $100 over the course of a few minutes to write all this information. And users are not going to spend that kind of money. They expect it to be close to free, effectively.
No, I guess what I'm asking is like, why is Coinbase and OKX and Kraken as a centralized crypto exchange building a layer 2 to speed up transaction and lower gas fees? I guess, what is the use case on their side? I wasn't paying attention to all of this, but I feel like, obviously the users of, let's say, OKX or Coinbase, right? If they're using X1 or Base, they're gonna have lower gas fees. They're gonna have faster transaction rates if they're trading their token. But like, if I'm trading a token on the centralized exchange, I can just do that anyway, and they like take care of it on the back end, and maybe I pay some more fees. So is it really to like lower fees for the customer and gain more, get more users, or is there like a moat that they're building with, or maybe the exchanges are doing all their transactions on the layer 2, which drive down their gas fees, and so are able to increase their profit margins on each trade?
A bit of both. I think you touched on both. One, is purely transaction management. Like, I want to do some trades. You could do that, in a centralized exchange and just trust that Coinbase is going to carry out my transaction, and then you're good to go. If they do that on the L2, you have some visibility. An L2 is like a hybrid decentralized ecosystem where some parts are decentralized and you can have some verification that it's openly verifiable. But if you look at Coinbase, their launch of Base and their L2, they were promoting new use cases. They were telling developers, build your new use case on us, build your new DeFi app, build your gaming app, build your location, social media apps on Base. Okay. So maybe they think they can reach a new generation of app developers as a result of
that makes sense
being an L2. And the reality is, like, the best L2 technologies, Optimism and Arbitrum, a lot of that is open source now. So if anyone's going to build these applications anywhere, and you're an exchange and you'd like to have some of that living on your ecosystem, and they're already probably reaching out to app developers anyways, it seems a bit ambitious. I don't think it's an obvious win for them. They've got a lot of work to do, but there's some potential upside for them. They can build a real ecosystem. That makes a lot of sense.
It's like also an entirely new business. So like, it helps current centralized exchange users, but also an entirely new business. If Base ends up, I don't know what's going to happen, but if Base ends up being, cheaper or, faster than Arbitrum or Optimism or Polygon, right? They're all ETH L2s.
That's exactly right. They want people building the next, crypto AI machine learning applications to run on Base.
Exactly.
It's a fight. Exactly. It's a fight for their business.
It.
Speaking of which, since we're on the topic, since we brought it up, for people that might be leaving OpenAI, is there any companies that are hiring good AI developers that we should like advertise?
Yes.
What did you think
So
about that whole thing?
By the way, OpenSea also did massive layoffs like a month ago or 2 weeks ago or something like that, which I just learned about. So they were
Interesting.
not the only one. I don't know. OpenAI stuff was wild. Like first we hear that he's getting fired, then the board wants him back, and then he's not coming back. And initially I thought like Microsoft knew and Satya knew that Sam Altman was getting fired. And I was like, I literally was talking to someone and was like, Microsoft, even though they don't have any voting shares, they own 49% of the company. I'm sure the board ran it by Satya, but maybe it sounds like they didn't, and he got super upset that Sam Altman got fired, and then now Sam Altman's going to work at Microsoft. I don't know. This entire thing has been crazy.
Yeah.
Also,
I mean, at first I thought it was like Game of Thrones. Maybe it's just like the junior varsity, water polo club on the board.
And then, apparently, I mean, Sam, there was all this stuff about him doing like a bunch of other stuff, and he wasn't like focused on OpenAI, and then he wasn't like telling the truth to the board, and like no one could trust that he was like, they didn't know what was going on, so they weren't sure if they were like managing the company correctly, etc. But wasn't there a rumor that Sam was asked to leave YC, president of YC, because they were worried? The YC was like, oh, like Sam is working on like 5 different things, and like his full attention is not on YC.
Could have been. I didn't heard that.
Yeah.
But in fairness, that's definitely the case. What extent do you think their corporate structure had an impact on that? Like they are a nonprofit wrapped in a limited cap profit with a sometimes profit, but we still want to give you, we still want to hire people with options. Like, does that confuse their situation?
I'm sure it didn't help. I think at the end of the day, I really think that this was like, I don't think this has to do with corporate structure. I think this has to do with like the Sam and other powerful members of the board disagreeing on what the company should be, right? And if it's true what Sam said, that he didn't have any shares in OpenAI and all of that, then he didn't really have that much, voting power. But yeah, I just feel that like there was basically a difference in opinion, and a lot of the board members were there when OpenAI started as a as a nonprofit, and they want to keep it as a nonprofit. And Sam basically sold like half the company. He basically gave up all leverage to like Microsoft to get all those Azure compute credits, right? And so like I'm sure people were unhappy about that. I mean, at the same time, like I don't know how you kind of fault Sam for what he did, because like it was like this version of training machine learning models, like where we are today, is very much like, let me make my models bigger, let me get bigger GPUs, and let me give it more training and see what happens, right? And so like this current wave, and I say current because I think we will shift to a different wave of how models get trained in the next few years. But this current wave of model training is very much like, let's get as much data as possible. And so now you're seeing like, NVIDIA is releasing 2 new GPUs, right? The H200s and the H800s, which will be top of the line. And then there's going to be like a bidding war on those GPUs, right? Like everybody's going to want them, especially big tech, because they'll be able to build stuff that they've never been able to build before with those GPUs. So I don't understand how you could have not, like, even if OpenAI had been a nonprofit, what is it rumored that they spent like $400 or $500 million on GPT-4 or something like that, or $1 billion? I don't know, some wild number.
Astronomical.
How do you get people to spend? How do you get people to spend that much money, invest that much money to build, buy compute resources to build like a model that powerful, right? So I'm interested to see like what will happen now. Like, what if OpenAI is like, hey, we want to buy like the newest GPUs from NVIDIA, or, we need to get the newest GPUs from Azure whenever they get them from NVIDIA. How are they going to build like the biggest models? And what incentive does Microsoft have now to like, not give those GPUs to the new team that they're forming inside Microsoft, right?
Mm-hmm.
So yeah, I feel like, I don't know, just weird. I feel like this is almost like the beginning of the end of OpenAI, actually.
Yes. No, I think you could be absolutely right. Do you think it has any impact on the decentralized AI space? Does it reinvigorate the mission of that space? Does it change the mission of that space?
I think that this what just happened with OpenAI, I think proves that we need decentralized compute protocols on the hardware side, on the decentralized physical infrastructure side, so that like, you're able to get the GPUs that you need and not like end up in this mess. The only problem is that at the end of the day, you're still begging someone who has the top of the line NVIDIA GPUs to give you access, right? And this is like fundamentally, there are two problems here. One is that if you want to build the most powerful models in the world and spend hundreds of millions of dollars doing it, I'm not sure decentralized, like the question is like, how are you going to get like a data center with enough GPUs that is not Azure or AWS or GCP, because these guys will spend like billions of dollars. The second thing where I think decentralized really shines is there's no incentive today to improve distributed training. So what happens today is distributed training is along a cluster of GPUs, but the future of machine learning model training is being decentralized, distributing training across decentralized nodes on multiple locations.
Yes.
And I think this exact situation proves that like we need to get to that sooner rather than later.
I love it. I completely agree. That was back when we were doing Hadoop. That was the whole thing, was commoditized. You can run the computation across different geographies. You can run it on basic hardware, and each of those can contribute, rather than having super specialized high-end hardware and niche. Niche.
I mean, it's still like off-the-shelf hardware in the sense that like you're not custom building these chips, right? Like NVIDIA is building them, getting them manufactured, and then you're using them. But yeah, like imagine the new versions of the new GPUs come out, the H200s, the H800s, right? And the H100s are still pretty powerful, and people still don't have access to them. Next year, the prices of the H100s will drop when everybody wants H200s. And when the prices of H100 drops, everyone except like Google and Meta and Azure and like OpenAI will be like, I'm going to go train my models on H100s, and they'll be extremely powerful, right? And so like now if you could do distributed compute on, multiple data centers that have H100s that are outside of like the big tech's data centers, you're going to be able to build a really powerful model yourself without having to rely on like Facebook for Llama 2 or, Mosaic ML, which is now owned by Databricks, I think, and GPT. I saw somewhere like Llama 2 for, I don't remember what the token context window size is now, but basically it costs like 80 cents. No, 8 cents for like an inference query on the open source model, and like chat for the same exact equivalent work that you're doing. GPT-4 costs $8.50. I think it's like that was like 120x difference in price, right? So like, it's just better to build if you're a tech company, it's just better to build your own model, or fine tune Llama 2 instead of like, using GPT. If you're not a tech company, then you're like, oh, like, I mean, the nice thing about these big LLMs is that like sometimes you don't even need to like fine tune or train it on your own data set. You can just like use it out of the box for inference. But that's a different conversation. So yeah,
that's the other podcast that we're doing after this one, called
exactly
Deep Dive on LLMs with a shark.
Yeah.
Well, thanks for sharing that, man. It's helpful to hear because you're at the middle of it, and there's a lot going on in that space.
Yes. And like I'm going to be releasing a lot more news over the next few weeks. So once that gets launched, the press release and the announcements and everything, we'll be able to go a lot more deeper onto what we're building.
Oh, I love it. We should spend some time. Maybe get your
Yes.
co-founder on.
Yeah, I think
Promote.
maybe in January we can get me and my co-founder on, and we can talk through this.
Love it. All right. We'll put it on the calendar. Hey, Sean, this is a pleasure, as always.
Yeah, fun times.
All right, man. We'll see you next time.
Bye.
Take care.